Good morning. Over the next half hour, we're going to explore how AI has evolved from a software story into a strategic infrastructure story. And I think we're very lucky to have such a distinguished panel to discuss these issues. We'll be looking at the growing importance of energy, compute, and deployment, and how investors and capital markets are positioning themselves around this story. So firstly, I'd like to start with you, Sam, if I can, to get our conversation going. You're CEO at White Fiber, and thank you very much for hosting this morning. Your company is based in New York, and you're building vertically integrated high-performance AI solutions with a focus on scalable GPUs. Just the big picture. If you had to prioritize, what do you think really matters most in scaling AI today? Is it access to hardware, access to energy, or deployment?
Well, I think megawatts are certainly not fungible. I think the markets today are misunderstanding the scale of AI demand and AI-ready supply. There's a big difference between the two. There are many issuers who are sending out press releases, and they really just have land options. They're not really operators, they're option holders. And I think that's a big discernment that the markets are going to make a big difference on. So if you own the asset as opposed to having an option on it, that's a big difference. Interconnectivity is very important. Are you actually connected to the grid versus being in a multi-year queue for interconnectivity? I don't think the markets are discerning between the two just yet. And the third is, do you have actually a power contract? So those are three very big things. And again, I think the markets are currently just rewarding announcements on options on power, which is very different from being an actual operator of a scarce asset.
And perhaps strategic location is important.
Certainly, strategic location is very important, particularly for, I mean, these days infrastructure is becoming a national security concern in many ways. Governments are looking at digital compute infrastructure the same way that they're looking at ports, satellites, defense infrastructure. I don't think governments can tolerate just like a cloud login anymore. They have to have their own infrastructure. That's like the difference between a hotel lobby and a private vault. There are very sensitive workloads that take place, and I think governments prefer to have their own infrastructure. And I think sovereign wealth funds will be following policy. Policy dictates that governments should have their sensitive workloads in their own dedicated infrastructure. And I think sovereign wealth funds capital will be following that policy.
Thank you very much. Kerry, could I turn to you? You're Chief Strategy Officer at TeraWulf, based in Maryland. Welcome to the panel. You develop large-scale data centers powered by low-cost energy. I was fascinated the way your company transitioned from Bitcoin mining into AI high-performance computing. Very interesting indeed. But Kerry, there's enormous excitement and expectations surrounding AI today. Often not discussed are the possible constraints. Where do you see in general terms, the constraints emerging? And perhaps we could then drill down to energy as being one of them.
Yeah, no, I think Sam touched on the key constraints. I think if you think back over the last 5 to 10 years, building data centers was more of a real estate play. And find the location, design the buildings, and figure out the power after, because there just wasn't a significant power demand. Now that's sort of been flipped on its face, where the conversation is no longer where should I put a data center, it's where can I get reliable, near-term power that I can scale over time. And the reality is the pace at which AI demand is growing is far outpacing the cycle at which infrastructure is developed, right? So you can manufacture and deploy GPUs relatively quickly. To build a new power plant is relatively a 5 to 7 year a cycle and requires a tremendous amount of design and permitting and interaction. So I think the constraint is really finding those locations, and in order to do that, you really have to have an appreciation for, as Sam mentioned, the grid dynamics, interacting with the local utility, understanding the permitting process. It is not straightforward. And so I think for us, our background is, our management team's background is power and infrastructure, which is how we ended up, mining Bitcoin, because we were flipping from the supply side of the equation to the load side of the equation. And the biggest component of mining a Bitcoin is energy. And so we felt like we had a strategic advantage. And at the time, it was the highest value for a megawatt, if you will. Now that's completely changed, and it's in the form of AI infrastructure. So that's what we're executing now.
I mean, the numbers are truly mind-boggling. I think that the superscalers should be, we should be looking at 1,000 terawatt hours of electricity potentially, which would be 5% of global production worldwide in terms of electricity consumption. Where are the new sources, or how are we going to mitigate this incredible challenge, do you think?
Well, that is the challenge, and that's what's going to have to play out over the next 10 to 12 to 15 years, because, again, it's going to take a while to do the infrastructure improvements and transmission, to build the new plants. And so I think what you're finding is that the hyperscalers are understanding that in order for the demand to be realized, they're going to have to be more flexible, right? You can't operate at 99.99% of the time and consume that type of load consistently. And so I think what we'll see over the next several years is there are certain things that require that kind of uptime, but there are other things that don't. And so I think you'll find differentiation so that people can take advantage of some of the places where you may have intermittent power resources. And you may be able to leverage battery storage, for example, to keep that uptime going.
Carrie's right on the timeline. I don't think that any of this gets resolved by at least the mid-2030s.
Right. I mean, we could be looking at hardware innovation, distributed computing, AI-driven energy management, perhaps, or the nuclear option. That's being talked about as well, isn't it?
And I think, especially as I think about moving from Bitcoin into a much more credit positive business and infrastructure, I think a lot of the decisions around where it's being deployed, how it's being deployed, and especially coming from Bitcoin mining, where we used to work with the local ISOs and actually have that flexibility built into our power, contract. And I think there's an expectation that will sort of lend itself into how the AI or hyperscalers are looking to deploy. So I think there's going to have to be a balance, and that will work its way.
Yes, thank you very much. Carl, if I could move to you. You're founder and the CEO of Agentic Scale AI, focusing on cutting-edge AI, I think, which represents in some ways the next phase of AI development. And I think you've reached a super exciting stage in your company with LLM discussions with NVIDIA, and a quote on the NASDAQ later on this year. But I think it's fair to say, specializing in agentic AI, your company focuses on systems that not only assist, but enable decisions to be made. What sort of conversations are you having with companies today, and how does infrastructure come up as a feature in your conversations with your clients?
Yeah, it's really interesting. I think the whole landscape of what AI is has changed. We talk to a lot of companies about AI maturity. What does it look like in the company? And we term it as 5 levels. Level 1, which is where most companies are at, which is Copilot, ChatGPT, Claude. They're the sort of application experiences that you have. But we think it represents about less than 10% of the whole overall AI pie. And to sort of both Sam and Kerry, this is going to be happening. It's going to happen fast, and it's happening faster than we think. And so a lot of the clients we've been working with, particularly in the energy sector, and for example, we work with the largest energy retailer in Australia. We started with an agentic system that took out 11,000 complaints, something that took 6.5 days into 3 minutes, in a total autonomous way. And in fact, we think the best AI agents that get used are ones that you don't have to prompt, you don't have to ask it questions. They do work for you. And working with NVIDIA in particular, you may have seen earlier this year something they released called Nemo Claw off the back of OpenClaw. That you may have, a lobster is there, is the theme of it. And really that set loose what we think puts arms and legs now on AI. It gives it connections into things like your email and WhatsApp, but also importantly, allows it to have memory and a reasoning sets that just frankly are better than humans. So we're also starting to work with a lot of regulators, interestingly enough, because we think that AI has a huge role to play in making it easier, faster, much more efficient at an exponential rate. And even more recently, we've now started from an energy perspective working with both distributors and retailers doing forecasting. Things that would take, frankly, in some of the models, 11 years for 6 people, we're doing in 6 hours. And that's really where you're seeing the power of AI take it to the next level. And that includes even planning out where is the next set of infrastructure needs to go. And so that's the exciting bit of AI that we're working at, agentic AI. It's autonomous agents, which is quite different to what most people think AI actually is today.
When you talk to organizations, is it possible to identify the main challenges? I mean, is it technology? Is it integration complexity? Or is it organizational readiness?
It is almost 100% organisational readiness. We think the tech is there today. It really is. Right. And in fact, one of the things that we do with a lot of clients is use AI agents to help organise data, particularly unstructured data. Right. Things like emails and spreadsheets and regulations fit into that as well, is analysing that to say what's actually there. And frankly, that's where the human element labour comes in, and we can analyse and see what's going on and then have agents either do some of that work or more importantly enhance it. So things that might take years, as I mentioned, for forecasting, you do in hours of time now. So that exists in that unstructured data set, and it's definitely more of an organisational and leadership issue than it is anything else today.
We could get on to one of the conversations you're having with your clients, perhaps in a minute. But Ozan, if I could move to you. You're the founder and managing partner at Tanto Capital Partners, based here in London, which is a boutique specialised investment banking focus on AI. And I wanted very much, and I think we all do, to have your views on what finance that ultimately underpins the system, as it indeed does underpin everything in life. Could I ask you as a banker to give you your views on how investors currently are thinking about this AI space? I mean, where do they see the most immediate and impactful opportunities for AI investment?
Sure, thank you, David. And you focus on energy, infrastructure, and obviously AI comes into play at that. Look, we are reindustrializing part of the digital economy right now. You know, we spent 20 years trying to get into asset-light models, you know, in the tech space, and now we're kind of pulling back a little bit and are going to be constrained by the physical realities of infrastructure. So the narrative has moved from software towards more infrastructure, which means energy, which means compute, which means national security concerns, which means physical concerns. So from an investor's perspective, as the other panelists have touched on earlier on, the equity markets are a little frothy, and the participation rates in the markets are actually lower. So there's a bunch of larger funds trading the Mag 7, the AI story, which actually makes it quite a risky territory vis-a-vis what may come later on. So the real opportunity, we do believe, lies in investing in the infrastructure and the energy part of AI. Because if the assumption is, and our assumption is, that our society is going to be using and consuming AI much more going forward, we are going to need to power those data centers. We may end up leaning into more innovative technologies like small modular reactors, SMRs, that are that present opportunities but challenges. But ultimately, we are in the business of being able to invest in asset classes where we can price the risk as best as we can, and that's where the infra and the energy play really gets into its own level.
I mean, are there any particular parts of this industry that people are very interested in? I mean, GPUs, TPUs, for instance, data centers, network upgrades, edge computing,
I mean, all of the
quantum computing, all of those.
All of the above, but I'll segregate quantum computing to somewhere else, because I think right now we're going to be focused on getting agentic AI. We need to invest in data centers. And by the way, as the current geopolitical changes have shown us, we also have to invest in protecting those data centers physically.
Sure.
So that's one area. Edge computing becomes more important. It's especially important vis-a-vis defense and robotics. So therefore, TPUs become more important. And let's not forget, we are looking to invest in these asset classes with a macroeconomic backdrop where the cost of long-term debt is being repriced outwards. Cost of capital is being repriced outwards. So therefore, it's going to be more expensive to finance these projects going forward. Now, I'll separate quantum computing elsewhere because quantum computing, I think, is one of the most important potential innovations that we're going to have to digest, both from a financing perspective, national security perspective, and it's going to change a lot of things. It's in its early stages still, but I do think that it's going to become a reality much quicker than we think. And then the final piece, so if you have agentic AI, let's just say 2028 or so, quantum computing 2028 to 2030 or so, followed by the integration of AI and quantum into robotics, which is where the real next phase of growth is going to be. That's where the real opportunity, long-term opportunity lies, and it's going to need a lot of funding to come through. And I'm not so sure if the markets are ready to, or are pricing indeed, how expensive this is going to be.
Well, I mean, when we talk about funding, again, the figures are mind-boggling. I mean, the superscalers alone could spend over 700 billion to 1 trillion annually on capital expenditure relating to AI. I mean, this is an extraordinary figure. Data centers, power systems, semiconductors, cooling, etc. Do you think this is going to be, and we've talked about constraints already, one of the constraints in the development of AI? The money just won't be there?
Well, look, I mean, there is money out there, okay, especially at the hands of the hyperscalers and those large funds that are looking to find areas of growth to place that capital. So I don't think availability of liquidity is going to be the issue for those large projects, because let's face it, in a market like this, in a world like this, there are certain asset classes that are going to perform better than others. And one of them is going to be betting on innovation. Innovation is going to be driven by demand for AI, for data centers, robotics, amongst other kind of asset classes. So liquidity won't be the issue. The pricing of that debt or financing is going to be an issue. So there's a bunch of companies out there that haven't gotten the memo that their business models may not be feasible in this brave new world. I think that's where the issue is going to be, but I don't think it'll be an issue of liquidity.
Sam, did you have any observations on that and the constraints in terms of this incredibly rapidly developing sector?
I mean, just taking a step back, I don't think people realize how fundamentally transformative artificial intelligence is. It's the third wave of the industrial revolution in many ways. The first wave was when electricity was invented. That created a catalyst for the industrial revolution, and then the second wave was the internet. That was another massive catalyst and wave that transformed capitalism, and now you have artificial intelligence. So, and I think that is going to dwarf anything that we could even imagine. So I think constraints are a real thing. I think, like I mentioned earlier, megawatts are not fungible. And to Carrie's point, the timeline in terms of all this being resolved will be probably in the mid to late 2030s. But Ozan, I think that's how you pronounce your name, mentioned the intersection of artificial intelligence and robotics, and that's going to be something I can't personally see, but I'm sure that's going to transform society once that intersection occurs.
Can I just add something onto that?
Yeah, please.
Just because I think we talk about these things as if we live in a bubble. There is a phenomenal social element to this thing. Okay, so you said about the Industrial Revolution. In previous industrial revolutions, we had the time for labor force to adapt and get retrained. In this case, we don't have that time. Now, given enough time, say a decade, 15 years, 20 years, in a way we are lucky because this also happens to coincide with demographic decline in society. And as in most mature societies, you do witness a reduction in labor productivity. So when AI combined with quantum combined with robotics come in the right time, it has the potential to offset these issues. The problem is transition. So we are facing a transitionary phase of at least a decade or more where all of the stuff that we're talking about here is going to have real-world consequences, which means it's going to have real-world consequences on markets, on governance structures, and society.
Thank you. That's a pretty good point.
Ozan also talked about the price of debt, and I think that's something that public companies such as, I'm sure TerraWolf does an incredible job at it, and White Fiber, we do our best as well. And with respect to, selecting counterparty, that's very important for your debt financing. The flywheel is basically control the asset, and then select the counterparty, and then finance. And financing costs of capital always depends on, of course, the quality of the asset and the quality of the counterparty. And so that's very important, because with that kind of cost of capital, you're able to scale. That's the flywheel. In our case, what we've done is we have this massive flagship site in North Carolina. There used to be a textile factory. We retrofitted that into a Tier 3 data center for Nscale, actually, a company that's based here in London. And there's an investment-grade offtake, but you need to be very strategic on the confluence of the counterparty mixture of your strategic asset. Otherwise, your cost of capital or the debt financing will not be attractive.
Thank you. Thank you. Kerry, could I ask if we can drill down a little bit? I think there's an implicit assumption throughout the industry that compute demand will increase exponentially and continue to do that. However, we're also seeing model efficiency improvements, smaller specialized models, edge AI optimization, reducing future GPU intensity. Do you see a situation where efficiency gains will ever start to outpace the infrastructure demand?
It's interesting, just going back to the Industrial Revolution, one of the things that, people have asked is the bubble going to burst, right? Is this actually, is it going to be realized? Are we going to crash and burn? But I think about the internet, and that was built on a premise where there was no existing demand, right? It was like the internet became available and then people realized it was a tool that could be used. Whereas now with AI, the demand is already there. People understand it, it's just how fast can we get it done. And so I think as we, as infrastructure builders and operators think, our capacity, our availability it's always going to be an insatiable demand. And so if there are efficiency improvements, it's just going to mean that they'll be able to process more compute in the same shell. So from my perspective, we'll do our best to keep up from an infrastructure, and over the next 5-10 years, as efficiency gains are made, as the compute becomes more flexible and can integrate with the grid more seamlessly, I think you're going to start to see there's going to be sort of like a consolidation of the energy and the compute, because effectively, at the end of the day, the underlying backbone is the infrastructure. And so we're seeing a lot of partnerships with utilities. You've obviously seen some of the hyperscalers pursue partnerships directly with utilities as well. And so I do think there's going to, at some point, be a convergence because these tools, they're so symbiotic.
Thank you very much.
Yeah.
Ozan, how does that feed into any discussions you're having with clients? Do they talk about potential AI infrastructure obsolescence at all? Long duration, the infrastructure
not at all. I mean, I guess if any, quantum computing is the one that poses the most potent challenge to any of these things. But leaning into Kerry's point, that's why I would anticipate, and we are talking about this a lot to different regulators around the world, that focus on SMRs, small modular reactors, is key. Now, it's challenging because it's not just about technology, but how do you do the public-private partnership? How do you do the waste management element of it, disposal element of it? And up until recently, from a regulatory perspective, Canada was kind of going ahead of other countries. But with Donald Trump, combined with the Texas Governor Greg Abbott focusing on trying to make Texas a focal point for SMRs, we are looking at conversations where Texas may end up making public the first functional SMR, and if it does, it ends up de-risking a lot of the base power needs of data centers. So that's one area that we're focusing on in the near to medium term.
I was going to add something to that. Yes. It's fascinating from our perspective. We build these private or small language models, and working with the two of the biggest banks in the US. And about a month ago, Mythos with Anthropic came out, which frankly none of us thought were going to be there as far as, let's say, potential security issues till quantum computing. So we thought it was that far away, and that was actually really surprised us all, just how fast this is moving. And then when you see this in action, to your point, Kerry, it is exponential. These agents and agentic solutions can run on loops, which are just mind-blowing when you see how big they can exponentially become. And there's really, frankly, in our opinion, no limits even today, let alone where it's likely to go in the next few months and years. And to see the exponential growth of every model maker, every solution provider and hyperscaler, it is now what you saw the investments a year ago are coming to fruition now, and you're seeing that will continue to exponentially scale from an actual operations. And to your other point, it's not just operation out cost, it's the new business models, which is really exciting and scary.
That's right. And also geopolitics plays a big role into this. So just recently came back from the Milken Global Conference in LA, and a lot of conversations around the geopolitics of all of this, as it will become more pronounced over time.
Actually, Sam, that was my next question I was going to put to you. I mean, the geopolitical competition between AI infrastructure, are we moving towards a world where AI infrastructure becomes strategic, sovereign infrastructure, the same way as, for instance, oil, semiconductors, telecoms might be, with all that this entails involving government influence potentially, regulation, and future direction of the industry? Do you, Sam, see that as a...
No, please go. Please. Yes, I think, as mentioned earlier, as I started, I think compute sovereignty is certainly going to be driven by policy, but then I think that policy is already there. Governments need to have their own dedicated space. They can't be really sharing a cloud compute. Like I mentioned, you can't just give a cloud login to a government anymore. And I think, I think that's the short answer to that question.
I think it already is. It already is a national security concern.
Right.
And to Sam's point, the moment that compute becomes a national security concern, you can't expect governments to treat it as just a private sector effectively. They'll want to have control. You know what I really worry about? I'm optimistic in general, but given the really truly incredible impact that AI and agentic AI is going to have on society, we should really be trying to coordinate how we govern this thing. But the reality is, because of the inevitable strategic battle between US versus China, which is not going to dissipate, I think we're going to go more towards silos and more towards a more adversarial stance, which does worry me.
Well, you saw the situation when Mythos was announced and Anthropic, and the government intervened very promptly on that.
And we haven't even gotten to the quantum computing being unlocked yet, and that's going to be the watershed moment for the world.
Kerry, would you have any observation on that?
No, I just say it's very interesting because you look at the situation in the war right now, and some of the targets are data centers, right? And so we've seen a lot of the UAE trying to prioritize the US, for example, in terms of locating their data centers, which is understandable. But also, as you think about, protecting it, and it's just becoming much bigger than an infrastructure alone, right? It's the whole thing.
Yes, indeed. Well, we've just about come to the end of our time, unfortunately. I mean, I think we could have gone on for another 15 minutes at least. But look, thank you very much. It's been a very interesting conversation, and I don't know if we could all give a big hand to our panel. Thank you very much indeed.